Home prices still high, mortgage rates still high, and now rents climbing again. Rent jumped 4.1% across San Diego County and a whopping 9.3% in the city. In San Diego, even standing still is starting to cost more. If you thought rent was the cheaper, safer move, think again. This new report shows competition is heating up. Renters are staying put, and some are flat out giving up on buying altogether. I'll break down what's happening and what it means for you. Home builders, the essential part to solving the housing crisis, well, they're backing off. And in a market already starved for homes, that's a real problem. New data shows builder confidence has dropped like third period French. Did I just date myself with that analogy?
Yes, you did.
Permits are down and starts are slowing. Translation? Fewer new homes on the way, at a time when we desperately need more. If you're hoping new construction would help ease prices or inventory in San Diego, yeah, that timeline just got longer. Let's talk about what's behind this shift and what it means for buyers, sellers, and the whole market. This and more covered in this week's San Diego Market Matters, and I'm Karl, your San Diego realtor. If you're enjoying my content about the real estate market, particularly here in San Diego, consider liking this video and subscribing to my channel for more updates. And if you're thinking of selling or buying here in San Diego, I have my contact info in the description below. People like you are reaching out to me regularly to talk about the market and what makes the most sense for their next move. Feel free to reach out if you're thinking of selling or buying. Now, let's get into the good stuff. Let's kick things off with your quick market update, and it's actually a pretty healthy mix this week. Unemployment ticked down slightly to 4.1%, and jobless claims hit their lowest level since mid-April. We've now had 5 straight weeks of declines in new unemployment claims. Not exactly a recession signal. The economy's not booming, but it's holding. Stronger jobs and steady inflation is putting more pressure on the Fed to hold off on cutting rates. And as of right now, it's practically 100% chance that they're not gonna do a cut in the July meeting. As for September, maybe, but don't count on mortgage relief anytime soon. As for mortgage rates, still sub 7%, which is a small victory, but it's a reminder. We're not out of the woods yet for high rates. So bottom line, the economy is steady. Rates have ticked up very slightly, and the Fed is in a wait and see mode heading into late summer. In the meantime, we've still got opportunities here in San Diego, but buyers and sellers both need to be sharp right now. Now, let's dive into the new data that reports housing on the rental side of the market and its way back up. According to a new report from the Southern California Rental Housing Association, rent across San Diego County is up 4.1% year over year, but in the city of San Diego, it jumped 9.3% compared to this time last year. That's a serious bounce. Now, for some context, we actually saw rent drop in 2023. Average rents were down over 7% between 2023 and 24. So while this recent up spike might feel aggressive, we're still hovering slightly below 2023 peaks in many areas. But it's the direction of the trend that matters. Rents are heading back up again. And the why behind this comes down to a pretty simple equation. More renters, fewer available units. Region-wide vacancy dropped to 3.6%. That's pretty tight. But in the city of San Diego, vacancy rates are now 3.12%. So in other words, over 96% of all rentals are occupied, and that makes this a landlord's market again. Now, according to Zillow's rent index, the average rent in San Diego County is currently $3,025 a month, up 2.72% from last year and a staggering 37% from 5 years ago. We're up over $800 a month in rent since 2020. Now, let me say that again. That's $800 more for the same square footage in the same city. Why is this happening? Here's what I'm seeing. First, the data is showing that people are staying put. Roughly 56% of renters are renewing their leases instead of moving on. And that makes sense because if you're already paying $2,800 for a place and the same place comes on at a new listing of $3,300, why would you make a move like that?
I have no idea.
Second, new rental construction is still behind. Yes, the city permitted 8,500 new homes last year, which is a good start, but it's not enough. And many of the new units that are being built are luxury apartments, not affordable housing. So for average renters, options are still really limited. And third, and this is a big one.
That's what she said.
A lot of people who wanted to buy a home have decided to sit it out. With mortgage rates around 7% and the median home price near $1 million, buying doesn't make sense for a lot of households at the moment. So what happens? They stay renters, which adds even more pressure to an already tight and competitive rental market. And that's the real story here. The challenges on the buy side are bleeding into the rental side. If you can't afford to buy, you rent. But if more people rent, rents go up. It's not rocket science, it's basic supply and demand, and San Diego's demand is relentless. So what can we expect next? Forecasts are suggesting rents will keep rising, but maybe at a slower pace. Some analysts are projecting 2.5% rent growth for 2025, so not as sharp this year. But vacancy is still expected to stay below 5%, which means competition for rentals isn't going away anytime soon. And if you're thinking of buying either to live in or as an investment, remember this: rents don't go down for long. Look at the historical data. The only dip in the last 20 years, 2020 during the global shutdown, and even that was short-lived. So if you're renting, know that you're in good company, but also know that rent is a moving target. And if you're a homeowner or an investor, this is more proof that owning in San Diego can still have some serious long-term value. Now let's jump into the new home builder data that suggests that our hopes and dreams of more new homes coming to the market is going down the drain. Let's get into this. New numbers from the National Association of Home Builders and Housing Wire show that home builder sentiment in June hit its lowest point in years. We're talking across the board: confidence, buyer traffic, projected sales, all trending downward. So what's going on? It starts with interest rates. Probably no surprise there for you. Builders were holding on through early 2024 thinking, all right, rates will come down, demand will come back, we'll keep building. But instead, rates climbed again, demand softened, and now builders are hitting the brakes, and they're hitting them hard.
Just hit the brakes! I am hitting the brakes.
According to the Census Bureau, single-family permits dropped under 900,000, lowest in nearly a year. Starts are flat, which means builders aren't breaking new ground. Homes under construction are down. Completions are up slightly, which makes sense. If you already started a project, you're gonna finish it, and you're gonna wanna get that offloaded from your inventory as soon as possible, especially if you're worried about the market and your profit lines. But after that, builders are waiting. This is not a random mood swing. It is a strategy. Builders are pausing land buys, delaying new phases, and waiting for more clarity on rates before committing capital. Because at 7% mortgage rates, fewer buyers are buying, and builder incentives like rate buydowns, they're getting really expensive to maintain. Now, here's where it gets even more serious. Moody's chief economist, Mark Zandi, who's been pretty measured in the past, recently raised a red flag. He said the slowdown in construction is becoming a full-blown headwind for the US economy. Why? Because building isn't only about homes. It fuels jobs, trades, services, retail, and spending across the board. When building slows down, the ripple effects spread far, far beyond housing. So what does this mean for us here in San Diego? It means don't hold your breath waiting for a surge of new homes to solve our inventory problems. If anything, this construction slowdown will prolong our imbalance.
I can't win.
Our increase in inventory will be primarily fueled by the resale market only. But keep this in mind, less new builds contributes to a tighter supply. Low mortgage rates are locking in many sellers from being able to sell, again, contributing to tighter supply. On top of all of that, recent reports from Realtor.com states that 50% of sellers that are not getting their price are pulling their homes off the market. This will all put pressure on both prices and rents. Now, some data is showing buyers are gaining good negotiation power back, but who knows how long that will truly last. Bottom line, if or when prices dip, they may not dip for that long. And that's a wrap for this week's San Diego Market Matters. If you haven't subscribed yet and you got a lot of value out of this video, here's your opportunity to subscribe before I disappear into the abyss of the YouTube algorithm. Or you can quickly click on one of my other videos, which should have popped up in each of these corners by now. As always, I'm Karl, your San Diego Realtor. I'll see you next video.